Use Bollinger Bands to find the best entry points for your trades. I used to trade manually, but I started using Bollinger Bands and my win rate increased from 50% to 80%. Let's take a trend strategy in which the trend is determined by simple moving average on a daily time frame. On the one hand, the very signal of a trend change may already be enough for some strategies. On the other hand, we can adjust the entry methods and apply a volatility indicator, such as Bollinger Bands, with which we will add volatility accounting to our strategy. To take a better position before the expected continuation of the trend, we will enter on pullbacks. In theory, this approach can save a few points on stop losses. The idea of this experiment is to evaluate how profitable it is to enter the existing trend on a pullback compared to breakout entries. The behavior of the bands depends on volatility. The higher the volatility, the further the bands diverge from the average. Traders begin to get acquainted with this indicator using the example of a breakout strategy, the essence of which is as follows. First, we wait for the narrowing of the Bollinger Bands. Then we set buy and sell stops outside the bands in anticipation of a breakdown. The opposite approach is also used. The price going out of the bands is used as a counter-trend signal. You may have noticed that bands have three lines: the upper band, middle band, and lower band. This is to show the fluctuations in prices. The price of a currency moves outside the band on either side is not usually sustainable. In an overbought market, prices have become denser than the upper band. The opposite is true for a bearish market. Contraction and expansion denote low and high price volatility, respectively. Most of the trades in a particular price action happen at the boundaries lines. As we mentioned earlier, Bollinger Bands are composed of three lines. The center line is a simple moving average with the default value of 20, which can be adjusted as per individual needs. These values can also be adjusted to fit the requirements for each person's unique trading. The upper band of the Bollinger Band represents a value that is 2 standard deviations above the average. Conversely, the lower band represents a value that is 2 standard deviations below the average. So let's recap. What are Bollinger Bands? Bollinger Bands are one of the best indicators for trading. They can help you understand a market strength and identify tops or bottoms. Bollinger Bands trading strategies. There are a few strategies in using Bollinger Bands that can help you trade more efficiently. To help you understand what might be best for your style of trading, we will go over each one of them. Double bottoms, reversals, riding the bands, Bollinger Band squeeze, snap back to the middle of the bands, double bottoms, and Bollinger Bands. A Bollinger Band strategy involving a double bottom setup is a good choice if you're looking for something that's often reliable. To do this, you first need to set the chart up to meet these requirements. Next, load the Bollinger Bands on your chart with the following settings. Lookback period, 20. Standard deviation multiple, 2. After identifying the double bottom, the W signal with substantial volume, check for a price pullback that closes outside of the lower Bollinger Band. Reversals with Bollinger Bands. One more simple strategy popular among traders is to fade stocks when they are trading out of the bands. However, let's take it one step further and apply candlestick analysis to that strategy. To avoid shorting stocks that gap up, wait until the next day. If the stock closed near its low and is still entirely outside of the bands, this might be a good opportunity to buy that stock. Riding the bands. The single biggest mistake that Bollinger Band novices make is selling the stock when it touches the upper band or buying it when it reaches the lower band. The currency indicator's creator, John Bollinger himself, said a touch of these bands does not constitute a signal. This does not mean that the stock is going to tank from now on. There could be a longer-term trend brewing, and this will allow us to profit on these fluctuations by scaling out of our position during up and downswings. Bollinger Band squeeze. This indicator allows you to identify the periods of stagnancy in the stock market a few weeks in advance. Knowing this can be strategically beneficial, as you can adjust your investment strategy accordingly. The idea is that when the volatility indicator reaches its lowest level in 6 months, it's time to expect an increase in volatility. It also goes back to what I just mentioned about the tightening of bands. Snap back to the middle of the bands. You can use this strategy if you feel confident in your analysis, but don't want to ask too much of the market. The idea is to wait until the midline gets tested before entering a new position. To increase your odds at placing a high-value trade, go along with the momentum of the major trend and make sure to invest in instruments that are performing well. Make profits with Bollinger Bands strategy. A basic Bollinger Band strategy can help you make profits. Let's take a look at a real-time trading situation that show how we could use Bollinger Bands in order to identify buy and sell signals. After the strong downtrend, prices moved below the lower band, and this indicated that it would be profitable to sell those assets. When we saw the price of an asset trade outside a 95% confidence range and break a key level, we felt it was time to buy. Tips for Bollinger Bands trading. Bollinger Bands were designed to provide a relative definition of high prices and low prices. They do this by comparing to indicators and price action in order to make accurate buy or sell decisions. The price may dip below the lower Bollinger Bands or rise above the upper Bollinger Bands. It's good to use volatility and trend indicators before counting on the indicator to clarify a trend in price. You can use one momentum or volume indicators, but it's important to not use two of the same type. Bollinger Bands can help to clarify pure momentum patterns such as M-tops and W-bottoms, and also warn when there are big changes in momentum. Additionally, Bollinger Bands can help you with trading in the crypto market. The Bollinger Bands are a force to be reckoned with in trading markets. They're based on volatility and measure investor sentiment by measuring how much trading there is within a specific range on either side of the band. One of the key features of Bollinger Bands is a phenomenon called squeeze, which is when the bands get tighter and signal a good time for trades to be volatile. While it is true that when the bands move further apart it usually means a lower level of volatility, this should not be taken as an indication to sell. You should trade according to your strategy. Sometimes it is important to note that the price being inside a Bollinger Band doesn't necessarily mean oversold/overbought conditions. Some useful trading strategies are Bollinger Bands, moving averages, the RSI, and oscillators. While there is no exact reversal point, a combination of indicators may help you increase your chances. Bollinger Bands react to the intensity of market activity, expanding outward when markets are active and compressing as they calm. Bollinger trading can be used to identify the trends. During strong trends, price usually stays close to the outer band. Momentum changes if the price moves away from those upper and lower bands. Bollinger Bands trading is traditionally seen as an enhancement to the current system. It tells traders when a certain asset will become more volatile, so they can decide if it is appropriate for them to take trades. For this reason, traders often use a combination of indicators to confirm their analysis. MACD and RSI are two that commonly go together with Bollinger Bands. 95% of all price action is expected to happen between the upper and lower Bollinger Bands. So for a ranging market, this strategy would be perfect. This technical indicator provides boundaries around extreme prices, which typically contain the most market activity. Any breakouts above or below the boundaries represent significant events in the market. When prices rise above the upper band, it's a sign of overbought markets and triggers a sell signal. When prices fall below the lower band, it's an indication of oversold markets and issues a buy signal. When prices leave a long candlewick but don't close either above or below the Bollinger Band envelope, this further confirms the warning. Such a situation could be signaling that the price might reverse in that direction. Therefore, some traders use the Bollinger Bands to identify reversal points. These strategies are usually called contrarian Bollinger Band strategy.
Please like, subscribe, and hit that bell button for more videos.